Welcome to Invest. We talk about investing, finance, and professional development. So according to of 9:12 a.m. on the Eastern Time, Ethereum $2,681, down about 0.38% so far. Perspective over crypto market, you see clearly on this Saturday morning on the East Coast, we're relatively flat on the key coins, while at the same time on the altcoin side of the house is collectively relatively flat. Beside Algorand's currently up about 13.27% so far. So it's typical, there are some micro affectation that's driving this specific assets, but collectively the overall market, seems like Luna, the technicals actually came true, breaking below 75, down about 5.6% so far. So we'll dive into the technicals a bit on that specific one. And look at the media front collectively, very typical and very usual. Saturday mornings are typically not the most active on the media front. But there's some, more negative regurgitation, saying that next week the market can be another volatile one, especially if the bond yields continue to scream higher. I mean, no ish. Come on, like it seems like the media is trying very hard onto reminding and cultivating, influencing people, like you and I, reading into the news thinking that, okay, that's face value. But remember, most of the adjustments has been mostly baked in already. So anything that is being, influenced going forward is mainly going to be, obviously with the rates. But that's something that is expected, right? But what is the main catalyst on the volatility that we've been seeing? It's basically corporate investors, or corporate institutions, which are typically the owner of these media companies, trying to, manipulate, not directly, adjacently, driving some stir emotionally into the market in a way that they can make the logical bet on their behalf to take money from, retail investors like you and I, right? So it's probably good to, use your spidey sense to detect the pattern of how frequent are these news being produced, right? So I would say, read these news with a grain of salt, right? And it's such a interesting conundrum at the same time that I don't know if you ever thought about this, is that yes, we could always blame the institutions, but ultimately, collectively, we have, as retail investors, have a lot of market power as well, right? If we collectively call their BS, if you may, and work, counterproductive towards what they're trying to do, without like being lured or being influenced by the media affectation that they curate, you should technically have the opposite side of the spectrum, right? Very similar to like the Wall Street bet affectation with respect to like GameStop, AMC, those type of stocks, right? When you have such influential members on driving the emotional roller coaster, you could technically take over the institutional capital that are in play, which is AKA Melvin Capital, that subsequently went, sideways, and I think they went away until like Apollo, and Citadel. Some of the other mega funds had to step in to support and help that guy out, in return for an equity ownership of their fund, right? So, something to think about, right? It's a really complex psychology matrix, but it's something to really think about, right? It seems like it's such a weird conundrum that the way they stitch the story, and also it's like at the same time it makes you like the one that is fall into the trap that makes them the victim rather than the other way around. You know what I'm trying to say? So, like, that saying that typically the news are old news, which is true, and also whenever you see the news come out, is already mostly baked in or adjusted. So you should probably do the opposite when the media is saying the opposite. You know what I'm trying to say? So let's just dive into the technical. That's just a thought. Hopefully that makes sense, because ultimately, You know, investing is a very complex type of endeavor. You could apply quantitatives, but also psychology wise, you have to detect the pattern, right? We are in the business of detecting pattern and also risk management, right? Detecting pattern, risk management. So with respect to recording time of 9:18 a.m. on the Eastern time, we are at the 2675, lingering around the, you know, we're just levitating. We're not even at a level at the moment right now. You could say that we're at the flat number, right? But we're not really it. We're just kind of gliding with the 39 out of 70 right now as the next level, which is a steep one. If we could even get there, it would be 2530 or 2550, right? To be more just like rounded up. And right now we're still at a bearish trend, but it's more normalized. You could see that we had that mountain of an apex as we hit 49, which is try to break above the optimal level on our side, which is 50. And that was a point that you need to watch, right? Because if you didn't get there and didn't break above, the momentum shifts and subsequently reverse back down because of just overreaction. Also, we fell into that Friday affectation at the same time, gliding back down to the 39, right? So what's the best policies for us to be, you know, going forward is to hold. Do not let the market shake you, right? Right, selling now, especially with these like weird news pattern that we're seeing as well, is like just try to like put salt on your wound, almost like regurgitating, reminding you how negative, how bad, how painful, how much fear is going on. It's you know, there is working for you, right? It seems like you are depressed, you're feeling uneased, so it seems like their, you know, curation of these news is working, right? So be careful about this, right? With respect to Bitcoin, you can see that we're at the 35, 36 right now. 36 out of 70 as well. It's logical to DCA around these level, right? It's very relatively oversold, right? And where's the next level? 34,500 from here, right? With respect to Ethereum Classic, anywhere from basically 26 below is logical DCA from here. Dogecoin 12 cents below from the current level. Cardano, flat as well, anywhere from basically, yeah, I would say current level down is still logical to DCA. Solana is in between levels. It's trading around the flat level right now, right? 85 to 75 is still logical DCA, right? With respect to XRP, up about 0.5%. Anywhere from 69 to 57 is logical. We are in between levels, but on the lower echelon of it. So we are about to curve up, and so I do like XRP a lot right now in terms of the setup. Polkadot's about 0.71%. Anywhere from $14 down is still logical with the 32 op 70 right now. Algorand's about 14% right now. It's doing its own thing. And it seems like there's a golden cross that was formed recently. That's why it's triangulating into the surge that we're seeing in front of us. And also at the same time, when we were at like the 59, it was extremely oversold at like the 28 out of 70. But Algorand's a little funky, right? It's like we've been hitting rock bottoms for some consecutive days, or forming new rock bottoms on the consecutive days and weeks. But right now, it pumped up really fast at the 53 out of 70 right now, so probably not ideal, right, to DCA at these levels yet. Shiba Inu, so we broke 2100, right? So as we slowly bleed, right, and you can see we have a large separation. So going down to 2100, 1400 to 900 would be very logical because we broke the current level. So I think going down to like the flat levels, right, like the 15, 16, 17, but the real level is 1400, okay? Respect to MATIC, about 0.25%, anywhere from basically around $1 is fair to DCA at the 33 out of 70. AVAX 59 to 50 at the current frames. Luna broke 75, right? So this is, let me draw a line here so you could tell. You could see it clearly we broke below 75, which is not good, right? As we go down, the levels will be going to 75, would be the first level, 62, 52 to 45 from the respective levels, right? Okay, so that's really it for this morning. Hope you guys have a good day. It's a rainy day in New York City, so I'm probably just going to be staying in. But have a good rest of the week. weekend for you, and I look forward to catching up with you guys later. Take care.